Good morning and welcome to Executive Talks brought to you by AC Capital Market. Today we have our senior market analyst Jeffrey Halley joining us during a time of uncertainty. Welcome, Jeff, and it's great to see you again.
Yeah, great to be here, Glenn.
Well, before we start, Jeff has worked as currency traders and analysts across several investment banks, such as Barclays Bank and HSBC, as well as appearing on global financial media, including Bloomberg, CNN, Reuters, and New York Times. So, Jeff, the market turmoil had wiped out more than $6 trillion since Donald Trump's Liberation Day tariff announcement. Can you tell us what's going on?
Yeah, that number might even be a bit higher now. It seems to change by the minute. Basically, the long threatened tariffs by the United States on basically the entire world have been enacted over the past week. I think the markets were pretty complacent about Donald Trump's intentions before the final tariff announcements were made, simply because he's so variable in his policy announcements. He says something, and then a couple of days later he changes his mind, or someone points something out to him and he sort of puts it off or delays stuff. So I believe the markets themselves weren't really positioned, shall we say, for the reality to hit. So when these announcements were made, we saw this gigantic reaction in the market, and that, of course, has been most obviously manifested by the massive sell-off in US stock markets and stock markets around the world. But also we're seeing energy prices collapse. Oil prices have they must be down nearly 15% down now over the last three sessions or so, as markets have gone, heck, all of these tariffs and the potential counter tariffs by the countries who are being tariffed are going to cause a global recession. We've seen also base metal commodities get absolutely cratered as well. This is all about the demand side of the equation. Of course, in a recession, there's less demand of everything, so therefore that's a negative for prices. So I think it's a case now of what happens next. We've seen China impose retaliatory tariffs of their own on the United States imported goods. What is the European Union's response going to be? Apparently, according to Reuters, they saw a document that suggested that 25% tariffs were coming the United States' way. But then, of course, Donald Trump has actually said that if anybody retaliates against them, then they'll put even more tariffs on those goods from those countries. And in fact, he said he was looking at adding another 50% of tariffs to Chinese goods as of Wednesday, in retaliation for the Chinese retaliation. And if this all sounds very, very confusing, Glenn, it is. And I think part of the market reaction is just because people are now scratching their heads going, what do we do next? What we are seeing is a huge move to cash, though. I think we're seeing gold being sold, and I believe that's to cover margin calls and other products, equities, commodities, and even US bond yields rose overnight. Bond yields move inversely to prices. Excuse me. So it does appear that there's this global move to cash at the moment.
Thank you, Jeff. That makes a lot of sense. The retaliation on tariffs. That is the underlying logic of this sell-off. So
And maybe we'll then get retaliation of the retaliation of the retaliation of the retaliation. I mean, where does it all stop? But it's not. Markets don't like uncertainty, and we're seeing that reflected pretty clearly around the world at the moment.
Well said, Jeff. Thank you so much for that one. The S&P. Well, let's move on to the equity side of the this drama. The S&P has fallen below the 5,000 point threshold. The Nasdaq's clearly in the bear market, and even the more resilient Dow is not far behind. How long do you think the sell-off is going to last?
Yeah, I think this is going to continue until we get some more clarity on the tariff picture. So I actually mentioned in yesterday's daily commentary, these little things that I put out for you on Monday and Tuesday, that there was actually some opportunities for some bear market rallies or intra week rallies in the days ahead. And that's simply because some of the technical indicators that I follow, most particularly the relative strength index, have all moved to heavily oversold levels. And that's usually an indicator that there is room for some small price gains back the other way. But to me, that still looks like a bear market rally to me. I think bottom picking in the bigger picture is extremely dangerous. You should always respect the price action. You should always respect the momentum, but you can be tactical. So even if we do get some price rallies this week, and it does look like there was some semi-stabilization on Wall Street overnight, which should perhaps give a bit of solace to Asian equity markets today. We still have to keep an eye on the bigger picture. And as I've mentioned with gold previously, that people ask me, how long can gold keep going up? Well, as long as President Trump keeps making these pronouncements, bringing in these policies and driving volatility in world markets via social media accounts, gold can probably still keep rising. So we haven't seen the end of it yet. We may get a few bounces this week, some sideways price action, but there's no indication yet of a low. And quite frankly, if the world trading outlook, tariffs, continues to deteriorate, so will stock prices, I believe.
Awesome. Thanks, Jeff. I mean, it's pretty much like catching a falling knife right now. There's no guarantee that we're bottoming out. It could be a what they call the suckers rally right now, and like you said,
Yeah, yeah,
sideways
exactly.
price actions.
And uh, I often think of it as that light at the end of the tunnel is the train coming the other way. That's the way to think about it. Nobody ever in trading gets the absolute low or the absolute high of a market. What we tend to do is sort of buy slightly off the lows of the market or sell slightly below the highs of the market. So I think for your viewers here, it's important to keep a correct perspective and not try and catch the absolute bottom, because that's a losing trade each time.
Survival is key in a storm like this.
Yeah, I think so. Yeah, and this is why we're seeing the move to cash. And well, we'll talk about this a little bit later, but that is definitely an indication that risk aversion is at extremely high levels and will continue to be so.
So we did see, like you said, we did see a slight rebound in Nasdaq overnight, and the sell-off in the S&P and Dow have somehow weakened. In terms, like you said, this is absolutely no sign of bottoming out. But do we see any trading opportunities right now, across the board, commodities, equities, in the short term?
Well, I think some of it is overdone in the short term. So particularly, I mean, I'm looking at the price action and the Nasdaq and the S&P at the moment. So if I just pop up and just try and quickly grab my charts here, we're seeing like the S&P was very, very heavily oversold on a relative strength index basis. That's one of my favorite technical indicators, and it works usually quite well, I've found, on stock market indices and also on commodities. And I mean commodities, I mean gold and oil and such like. We're at extremely oversold levels there, which means that there may be some opportunities around the 5,000 mark to be tactically long, but resistance is pretty solid now at 5,500 in the S&P. So I wouldn't be looking for an extended rally above that level. So I'm saying that there's opportunities now for some tactical short-term longs in the S&P. The same setups right there in the Nasdaq as well, although resistance now above 19,000 is pretty solid, but there may be some tactical opportunities down here towards 17,500. I think in these sorts of markets, the key is risk management. So it's always important when you're trading in these very volatile markets to have a stop loss order on your positioning. So if you're looking to do some of these tactical longs against the trend intraday, for example, or over the next 24 hours, do make sure that you have a stop loss order to manage your risk, because markets are being driven by well, let's be honest, President Trump's social media account, and we just don't know what's going to come out of that on any given moment in time. The other one I'm looking at is gold. Now, readers of my notes, my weekly notes, will know that I've been fairly bullish on gold for quite a long time, and as it's become the haven of choice in these uncertain times. Now, I believe that the price action we've seen, the fall from sort of 3,100 and sort of 65, we're down to around $2,980 per troy ounce this morning. We're just above support at 2,950, and the 100-day moving average, which is basically at the same level. So this could be an interesting opportunity to reset longs. I do believe the fall in gold has been driven by forced liquidation elsewhere. So if an investor was long equities and they've had margin calls thrown at them by their brokers, and they've had to basically liquidate profitable positioning in order to pay the margin calls on the less profitable now positioning, that is what's driving the sell-off in gold at the moment. And I think we're seeing the same sort of price action in US bonds overnight as well, liquidating of profitable positions to cover the nasty ones. So I think we're running into buy opportunity order levels here again. So, this 2,960 level, if we go through there, we could fall down to 2,000 sort of 850, and I think that would be an even better level from a technical perspective. Gold would have to close on a weekly basis below, I think, 2,700 in order to say that this up move's over. So I still think there's plenty of life left in it. We are approaching levels now where it should be interesting to reset longs.
Thank you so much, Jeff. These opportunities are fantastic. I think our viewers will find this show very, very inspiring, and there are lots of contents to digest. Thank you again for your time. And
Yeah, it's always, yeah, sorry, go ahead.
no, no, um, just saying that to our audience, this will be one of the very important shows that Jeff is going to share with us about, and we look forward in the future one day. And it's funny though, we did our executive talks last year with Jeff when the Black Monday happened in Japan. There was a wipeout, and this year it happens to be exactly the same time. There's another
Mm.
bloodbath in the market. So yeah, but. So does that mean, Jeff, if we don't see you anymore in the future, that the markets are going to be fine?
Yeah, well, let's hope so. I think where one man's scrap metal is another man's gold, isn't it? So but there's always opportunities and uncertainty, and if stock markets end up coming back off by, falling by, I don't know, 20 or 30% on a long-term investing basis, that's an opportunity for someone, isn't it? Yeah, to get in, instead of paying record highs for some of these world-class companies that will still be around. That's an opportunity for them to reset at much better levels. There's so much going on right now in the world, and we all know where that volatility is being generated from. We don't know how it's going to end. I mean, the markets are the world's a very uncertain place, even militarily, right now as well. So I, I think the important thing here, if I was going to leave our viewers with one note, would be to make sure that you're managing your risk. And when you talk to companies such as AC Markets and people like Glenn, there are tools on their platforms that will help you manage that risk. And successful traders are the ones that manage their risks well, not necessarily their profitability.
Thank you so much, Jeff. That's precisely what we need to learn from you. And we have Jeff on our executive talks brought to you by AC Capital Market. We wish you good luck trading, and thank you again, Jeff.
A pleasure. Take care, Glenn.
Thank you.